Anthony Salvanto, thank you. The price of silver and gold reached new highs today. Gold has reached record highs consistently throughout 2025 and are up almost 70% on the year. Silver prices, meanwhile, have gained almost 130% over the course of the year. Let's bring in Javier E for much more on this. He's the business editor of the Dallas Morning News and a CBS News contributor. Javier, thank you so much for your time. Explain this to us. What's the reason behind investors' appetite for silver and gold?
Yeah, look, the short answer is inflation. What you're seeing with gold and precious metals writ large is the inflation hedge in action. These metals are safe haven assets. They rise when the global economy is either turbulent, uncertain, or riven by conflicts, and all of these conditions are everywhere these days. So precious metals are basically these attractive alternatives to paper money in times when price pressures are bubbling. In 2025, the gold trade has been so lucrative for a number of investors, even in the face of a stock market that set new records. So fears of this AI bubble have kind of helped gold, silver, and platinum at the margins by boosting their safe haven allure. But basically, investors use these metals as a hedge against inflation. It basically acts as a tax. It diminishes purchasing power, it reduces the value of paper money, eats away at market returns, but it just helps investors park their money in alternative asset pools that can protect their returns, offer them higher returns, or at least just blunt the impact from higher prices.
All right, that makes sense. Cleveland Fed President Beth Hammack says she believes inflation is too high and that interest rates should be on hold after 3 straight cuts. What does the data suggest the best move is?
Yeah, I mean, you're seeing the central bank have this bias toward easing, but Beth Hammack's remarks underscore how there are these two camps that are splintering off. You've got the doves that are prioritizing growth and jobs over inflation. But the latter half is telling you everything you need to know. In that last segment you just had, consumer attitudes are really dour on the economy, and we see that across all of the sentiment data, and that is because of inflation. So the basic argument here is inflation still is running way hotter than the Fed would like. They want it more toward 2%. It's not as hot as it was 2 or 3 years ago, but it's still pretty warm. And you have a camp of policymakers that say we need to get this under control before we can even think about cutting rates long.
Okay, Javier E, thank you so much for joining us today, and happy holidays to you.
Thank you. Same to you.
Thank you.